Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at energy fuels.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis.
Okay, let's just jump right in, because the third quarter results for this company were, well, they weren't just good. They were a signal of a massive shift.
A huge inflection point.
We're talking revenue jumping from, about $4.2 million in Q2 all the way up to $17.7 million in Q3.
And the fascinating part is where that came from. I mean, over $17.3 million of that was pure uranium concentrate sales. This wasn't some, financial trick.
Right, this was operations.
This was them digging stuff out of the ground and selling it. They actually exceeded their full year 2025 production guidance for UUUU.
They didn't just meet it, they blew past it.
Blew past it. They hit over 1 million finished pounds for the year.
1 million pounds is a huge number for a domestic producer. So can you walk us through the mechanics of that? How did that production turn into such a healthy number on the top line?
It's all about the sale price they managed to get.
Okay.
They achieved a weighted average price of $72.38 per pound.
Wow.
And here's the kicker. The inventory they're selling now, it was produced or acquired at a much lower cost. Their weighted average inventory cost is only about $53 a pound.
So wait, selling a $53 product for over $72, that's a fantastic spread.
That's the whole game right there. And that's why their gross margins on the uranium sales hit 26% in Q3. That's a really strong number for a commodity business.
And I hear those margins might get even better.
Well, yeah, that's the plan for 2026. As they bring their really low-cost mines online, like Pinyon Plain, their actual cost of production is set to drop even more.
Widening that gap even further.
Exactly.
So what did all this do for the bottom line? They're still showing a net loss, but it's shrinking, right?
It's shrinking fast. It went from a loss of almost $22 million in Q2 down to under $17 million in Q3.
Why is it dropping so quickly?
It's classic operational leverage. Their big fixed costs, like running the mill, are already paid for. So every extra pound they sell now contributes way more to closing that gap to profitability.
Yeah.
The ramp-up is working.
That execution is great, but let's talk about their real competitive advantage, their moat.
We have to talk about the White Mesa Mill.
Okay.
It is, and this isn't an exaggeration, an irreplaceable asset in the current environment. It's the only operating conventional uranium mill in the United States.
Hold on, let me stop you there. For someone who doesn't follow this day to day, why is being the only one so massive?
Because you couldn't build another one today. I mean, the regulatory hurdles, the environmental sign-offs, the capital, it's almost impossible. So they have a structural monopoly on conventional milling in the U.S.
So they can process their own ore, other people's ore.
And even pivot to other things, like rare earths, all from one domestic facility. It completely bypasses the geopolitical risk of shipping materials overseas.
And we're seeing that advantage play out in their sales contracts, aren't we?
Oh, absolutely. They're locking in new long-term deals with U.S. nuclear utilities that run from 2027 all the way out to 2032.
That's incredible foresight from the utilities.
It is. It shows you how worried they are about supply security. They're willing to sign deals almost a decade out just to guarantee a domestic supply chain.
So beyond the operational moat, their balance sheet is, well, it's a fortress.
It really is. They finished Q3 with almost $300 million in working capital.
And the key number for me, zero debt.
Zero.
Debt.
In mining, which is just, almost unheard of. They've got $94 million in cash, over $140 million in marketable securities. It gives them total flexibility.
And they actually boosted their cash position recently, didn't they?
They did. They issued $70 million in convertible notes, which is a really smart way to raise cash. It pushed their total liquidity, when you factor in everything, towards $1 billion. This is a company funding growth, not survival.
Which is so important for their next big move, because this isn't just about uranium anymore.
Not at all. The pivot into critical rare earth minerals is probably the biggest long-term growth story here. It's a massive de-risking of the business.
And they just had a huge breakthrough on that front.
A huge one. They recently qualified their high-purity dysprosium oxide for South Korean automakers.
Okay, connect the dots for us. Why is getting a qualification from an automaker such a big deal?
Because automakers have ridiculously high standards. It's like getting a stamp of approval that says your product is the best of the best. It validates their entire rare earth processing model.
And it puts them right in the middle of a really important geopolitical conversation?
Precisely. China completely dominates rare earths right now, and they're starting to restrict exports. Having a reliable, high-purity American producer is strategically vital.
So vital that some people think that part of the business could get M&A interests down the line.
There's definitely speculation around that. If they start producing other heavy rare earths, like
Mhm.
terbium oxide, a big industrial player or even a government might want to lock that supply down.
The market definitely reacted to all this good news. The stock jumped almost 15%.
It did. And it seems to be building a really constructive base after that breakout, which suggests confidence.
And it's not just retail traders. We're seeing institutions get interested, right?
Yeah, it looks like an accumulation phase. Moody Aldrich Partners, for example, took a brand new stake of over 154,000 shares. That's not a short-term trade. That's a long-term belief.
And when you look at the bigger picture, the macro trends, they're all lining up.
It's almost a perfect storm. You have strong winter energy demand, the uranium spot price holding strong above $74.
And the one that I think people are still underestimating, the AI revolution?
Yes.
Explain that link. How does AI lead back to a uranium miner?
It's simple, really. AI needs data centers, and data centers need just massive, unbelievable amounts of guaranteed 247 power.
Which solar and wind can't always provide.
Exactly. So utilities are realizing they need to build new nuclear reactors, especially these small modular ones, to meet that demand. And all those new reactors will need a secure domestic supply of fuel.
Which puts Energy Fuels in the perfect position.
The perfect position. Plus, you have U.S. policy moving toward a potential ban on Russian uranium imports, which would just be another massive tailwind.
Okay, that is a very, very strong bull case. But we have to look at the other side. What are the risks here?
Of course. The biggest one is just the nature of the sector. Uranium is incredibly volatile.
We saw that right after the big surge, didn't we?
We did. It jumped 15%, and then you saw these profit-taking pullbacks of 3, 4, even 5% in a day. You have to have the stomach for that.
And what about valuation? Some analysts are raising flags there.
Yeah, if you just look at today's numbers, the price-to-sales ratio is high, and they're not profitable yet. So there's an argument that a lot of this future success is already priced in.
But the counterpoint to that is they're in an investment phase. They're choosing to spend money now to lower their costs for the long term.
Exactly. They are sacrificing short-term profit for long-term dominance.
So looking ahead, what's the next big event on the calendar?
All eyes are on the Q4 and full year 2025 results. We should see those in early February 2026.
And what's the market hoping to see?
The consensus is pretty high. They're looking for sales of around 360,000 pounds of uranium, which would be about $27 million in revenue. The key will be seeing that margin continue to expand.
And besides earnings, we should be watching for news on what? Rare earths.
Definitely. Any more updates on their rare earth products, especially if they make progress on terbium oxide or any new drilling results from their low-cost mines, any of that could be a major catalyst.
So when you put it all together, this is really a story about controlling a scarce, strategic supply chain.
It is. You have this irreplaceable domestic asset in the White Mesa Mill securing the uranium business, combined with this really smart, de-risked pivot into the critical minerals the world needs for the future.
And it's all backed by that fortress balance sheet, which lets them weather any storms and execute their plan.
A plan that positions them perfectly for the nuclear renaissance. A renaissance that's being fueled not just by normal energy demand, but by the massive power needs of AI and new technology.
We hope this analysis was useful to you. Make sure you subscribe to Smart Wealth with Joshua so you don't miss our next stock analysis.